Okay, good day everybody. Welcome to another episode of the Forex Trading Asia Daily Currency Call. So this is the currency call where you will get market economic updates, key support resistance levels, trade ideas, and more. So this currency analysis is going to be very beneficial to both the long-term investors and short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So a disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. Okay, so this morning we had the Aussie RBA monetary policy meeting minutes that was released this morning. So today we have Kim Hong, currency analyst and LCMS traders, to give us a quick summary on that. Kim Hong.
All right, thank you, Jinwei. Greetings, everybody. Okay, so in the minutes released by the Reserve Bank of Australia earlier today, the central bank actually expressed signs of hawkishness. So they actually highlighted that economic growth in Australia has actually recovered close to pre-pandemic levels, while the employment part of things had actually returned to pre-pandemic levels faster than anticipated. All right. Furthermore, forward-looking indicators of the labor market demand, such as the job vacancies and job advertisements, have actually remained strong and above pre-pandemic levels. So what this means is that at the moment, there are actually tons of jobs opportunities out there in the market. So, when there's opportunities out there, people can actually grab the opportunities, and that will actually affect the employment figures of Australia positively. Okay. And another point that the central bank made is that they continue to view the adoption of negative interest rate as an unlikely scenario in Australia. Okay, this is actually a good thing, as we know that during the pandemic we actually worried that interest rate may be cut to below zero level. So this affirmation by the central bank will actually help boost the Australian dollar, at least for the time being. But all in all, we still have to keep in mind that the RBA continue to expect that unemployment rate and inflation target will be achieved only in 2024 at the earliest. So yeah, despite the string of good data, we are still going to have to wait till 2024 at least, based on the central bank's prediction as of now.
Right, thank you so much, Kim Hong, for that. Right now we also have Scott here, Scott Andrews from Forex Briefcase Australia, to share his trade idea on Euro US. Scott.
All right, hello everyone, and it's good to be back. Let me just show you just my thoughts on, I've got the Euro up now. So that's the Euro up here. I do like to refer to the US index as well. But I just want to show you just some thoughts here on the Euro USD chart. So let's go to the daily first of all. Now, it's been quite interesting to see what's been happening with the Euro. It's had a really strong rally. We are approaching a level of interest for me at 1.2072 or so, where we have seen a turning point back in earlier March, on the 4th of March is when price started really breaking down through 120, and it's obviously rallied pretty strongly now. So in the meantime, there is a thought that there is a potential long trade up towards that level if you are looking for an intraday trade. So currently we're trading at 1.2058, and my thoughts with what the US index is doing as well now. So I'll bring the US index up just as a thing to refer to as a catalyst. So the US dollar has broken down pretty significantly. I'm just using the CFD here on the US dollar. So we're through 91 cents. We're currently trading at 90.96 or 90.95, just shy of that. So we're broken down through 91, and it really has started breaking down through us a tight trading range that's been traded as well. So we've ticked that box there as well. There is a weak US dollar. So we go back to the euro now. We just want to try and formulate a plan here is what I look for. And then in regards to the entry, really right now, it's not the most opportune time. When it was breaking out through 124 or so would have been great. I mean, now is you can, but for me personally, I won't be getting in straight away. I want to see how things open in the European session later today for us here in this time zone. And then the stop loss would be around 20 pips below or so. And then you'd be targeting an initial 20 pip take profit. And then you'd want to see what would happen when it gets to this point up here. Now, this could probably be a sell trade. So you'd be quickly flipping long bias to short bias. That's the nature of trading. But there's a little bit of a room to go here, and then we'll see. I mean, it has broken out before. So those are my thoughts on the euro US dollar, guys. All right.
Okay, thank you so much, Scott, for the trade idea on Euro US. So yeah, also yesterday, since yesterday, pound went up over 100 over pips. So today we are with Jin Dao Tai, founder of LCMS Trader, and a multi-million-dollar trader and also an international speaker. So right now I'll get him to share his views on the 100 pip move in pound. So Jin.
All right, good morning. So out of nowhere, we saw the pound dollar move, just yesterday, a good 100 pips off the 138.46 level, pretty much straight line upwards towards now at the 1.4 resistance level. You can see it here. 1.4 resistance level is the high point since way back in Feb, right? We haven't seen above this point in early Feb where it broke higher towards 1.42 and then very quickly it retraced back down. One of the reasons why we saw this move up, to be more specific, it was a good 150 pip, almost 160 pip move upwards, despite a lack of news coming out yesterday. You can see here on forextradingasia.com, looking at the economic calendar. Yesterday, we had no news on the pound, but I do feel that this massive move upwards is a bit of a front running of the news coming out today and tomorrow and also the day after. So there's a lot of pound news coming out, and we still see it moving now. A lot of pound news coming out. Today, we have employment numbers, claimant count change, unemployment rates. Despite looking to go a bit higher, I think that the market is expecting or predicting a little bit of a better than expected news. Hence, that big move upwards. Pay a bit more attention to the CPI numbers coming out tomorrow. I'm sure we'll be talking more about the pound dollar tomorrow. CPI numbers being released, very good numbers expected to come out. Was 0.4, expected 0.8 on the year-on-year. And also on Friday, where retail sales number for the UK expected to come out massively positive, especially on the year-on-year data. So, if you missed out this 160 pip move for the pound dollar, I think there is still going to be some opportunities to the upside, but be a little bit more patient. Probably not something that you want to get into right now, or let's see what happens at this resistance level before further possible trade actions.
Okay, Jin. Yeah. So yeah, let's jump straight to the currency in focus today, which is the euro. Jin.
So, well, Scott went through a good analysis of the euro dollar already, but adding on to that, there are several things to pay attention to on the euro dollar. Again, referring back to the news, the main focus on the news for the euro dollar, we don't have any news coming out for the euro this today. Well, some small news, but not too much of a price mover. On Wednesday, again, nothing there. But pay attention to the euro ECB interest rate decision for April coming out on Thursday evening. 7:45 GMT plus 8. No change expected for the interest rate, but the monetary policy statement is possibly going to come out with a probably a little bit of a positive note. The approach is going to be a bit more consistent, so you're going to see some positivity, some upside from the euro dollar here. Deposit rate staying at minus 0.5%. Probably no change in the lending facility as well. So it's all going to be same, but that consistency is going to give some strength to the euro dollar. And then also Lagarde is going to be speaking at 8:30 on the ECB press conference, so pay attention to that. With all that big news happening on Thursday evening, following from that, we do have the Euro PMI numbers coming out, both for the French and the German, leading up to the manufacturing PMI numbers for the Eurozone, the services PMI numbers for the Eurozone. And you can see here, despite the numbers possibly dropping a little bit, going from 62.5 to 60 on the manufacturing PMI, 49.6 to 49.1 on the services PMI. These are probably factored in because of the lockdown we see in the UK, we see in, oh no, not in the UK, in Germany, and also in certain parts of the Eurozone. So the PMI numbers is probably not going to have too much of an impact because of the ECB press conference decision and statement coming out before that, one day before. Putting all that into consideration, what this looks like on the charts would mean that on the euro dollar H4 time frame, as Scott was sharing, 1.2070 is that level that you want to see it break. Right now is at 1.2068. So this is alarm bells ringing. You want to be ready to try and take action at this point. We're looking to see if this candle can close above 1.2070, or even at this point right now, you could be looking at a easy, I'll zoom it in a little bit so it's easier to see, an easy 30 pip, at a 30 pip stop loss for a very good 70 pip take profit level from 1.20, let's say 1.2070, 30 pip stop loss, 60 pip take profit towards 1.2145. You're looking at a 1:2 risk reward ratio towards the upside here for the euro dollar. The next question is going to be, what happens at 1.2145? I think that if we don't see any further surprises coming from the ECB, we could actually see the euro dollar push even higher, especially paying some attention to the dollar index if it does continue its slide lower. Now the euro dollar is at 1.2070. That's all hands on deck, something to look forward to as a trade idea. Looking at the bigger picture, if the euro dollar does break above 1.2145, part two of that trade could come into play, but you want to be a little bit more conservative there. Let it break above 1.2170 before you could see a further upside towards 1.2261. So part two of that trade might not be immediate. It will take a little bit longer as we give it some margin to move up, but we're still looking at possible further upside on the euro dollar. As we look at the euro dollar on the H4 and on a daily time frame with further upside expected, coming back to the euro pound, it's dropped. We shared this, is dropped off that 8651 level, tested 8580, and now it looks like it's finding some foundation at 8580. Looking at it, it might be pushing higher, being dragged up by the euro dollar, pushing higher back towards 8651 and possibly higher. If you're looking for a trade idea, I would say 8620. At about 8620, you're looking at a 20 pip stop loss for a 20 pip take profit level, 30 pip take profit level, a very tight trade that you want to manage a bit closely. Or if you're a little bit more risk adverse, let it move up, let it break above 8651 before you can see a better trade higher, breaking above 8651 towards 8717. So very quickly, going through the euro dollar, seeing massive upside potential there at above 1.2070. We see a possible two trade idea pushing higher, and also the euro pound being dragged higher. But we'll get a better picture of the euro pound when we look at the pound dollar in more focus, especially with all the news coming out today, tomorrow, and on Friday.
All right. Okay, Jin, we have two questions from the webinar attendees. So I think it's regarding the pound US just now. So Sunil was asking if the price breaks through 1.4 convincingly today, would you consider going long before the news tomorrow? And then I'll just continue the second part, which is Marlon is asking, and then would you expect a small pullback in pound US in Asian session?
All right, so if price breaks above 1.4 today, it will probably be because of the employment numbers being released later, well, quite soon, in a couple of hours' time. That economic driver to push price higher with the current technical trend pushing it higher, I would still, first I'll be trading it up now, and then tomorrow I will either have a position that I'll be happy to hold on through the news, or I'll close out before the news, and then when the news comes out, have a pending order, be ready to take advantage of that move higher as the news comes out, or even before the news comes out. So I hope that answers your question there, Sunil. And for part two, do we expect a small pullback in pound dollar during the Asian session? At this point right now, there might be a small pullback. However, I don't think it will be so much because of the Asian session to say. I think the pullback on the pound dollar will more likely be because of that 1.4 resistance level being a psychological barrier around a nice round number 1.4. We might see people taking profits at that point. We might see, unfortunately, some people hitting their stop losses at that point as well. So that pullback or the increase of volume or the increase of volatility at that point is more likely because of a resistance level, because of a psychological barrier at 1.4. So sit there, wait it out a little bit, let it hit that level, let it pull back a little bit, or if it does break through straight away, then look for that trade. Try not to trade within that resistance area.
Okay, and I think Rens from the Traders Club. Rens is asking out of Bollinger Band. I think is regarding Euro USD. So do you have any comments on that?
The Euro US dollar on the H4 time frame is massive. Well, it's not massively out of Bollinger Band at this point. It's slightly out there. I think that being in a relatively early stage of the move up above 1.2053, we see it breaking that resistance level. I think that it might sit at this 1.2070 level. And Bollinger Band is likely to catch up to the price, to the current pricing. So although it is outside of band, take a little bit of a patient approach. It will probably sit there, move a little bit higher, but I don't think it's going to shoot upwards. I think it's going to gradually move up. So Bollinger Band is likely to catch up to the price or catch up to the candle there.
Okay, thank you everyone for the questions, and thank you, Jin, for the analysis. So we still have time. I'm going to put the panel in the spotlight in a while. I'm going to ask some questions about chart patterns. But before that, I'll get Daniel here, a trading coach in LCMS Traders, to share a little bit about how LCMS Traders Club can help you trade better. So Daniel, take away.
Hey, thank you, Junwei, since we got time. So, just let everybody know, LCMS Traders has started in 2014, where we help so many traders, exactly yourself coming in trading. Some of you just started traders, trading completely confused, don't know what to do, unprofitable, then to right now to actual understanding the market, then they recover the losses and finally be profitable. Now, this is how it's important. Not only do we teach the 5-step analysis coming in, which coincidentally tonight 7 p.m. is going to be the Forex Kickstarter coming tonight at 7 to 10 p.m. GMT +8. So those who have not signed up, do go ahead and sign in. But most important, also we have a community here. Now in LCMS Traders Club, it's really a must-have, community where you're serious about being profitable in trading. Now, what was so great about this LCMS Traders Club? One of the features that we have was actually we had a group coaching, and that's on Monday. Now, what we did through idea is that we go guide you through the current market conditions, show you how to identify trades and literally make profits together. Now, what we did yesterday was we looked at what happened last week, how impacted the currencies market with that, and how the trade idea was formed, what kind of decision making to whether to hold on to active the trades or to close to secure profits, giving you preparation at hand. Now, after which we look at the current market, what possible markets could we move in preparation for any trading plan? Now, just yesterday alone, what we did, we had few trades looking at the market together, group coaching. We actually identified several trades. One of the trades that we have identified here was the euro pound. Now, when euro pound, we were looking at it, very, very nice. If you look at the trade here, it is moving a short-term downtrend, retracing back into and bouncing off the resistance level, coming down. As we look down, we could identify, let's say, if we were to if we were to look at this trade here, okay, Euro G 0.8625, we look for a possible sell trade beyond this, and we're looking at the trade here. We look at stop loss of 20 pips for a take profit of almost 40 to 50 pips take profit target. Now, if you have been in the trade yesterday, when you look at it, you do know based on the 5-step analysis for those club members here, those who have joined us, we will look it through. We will have exited out where? We will have looked at exit out because it goes out of the Bollinger Band, just like just now Rance asked, hey, if it's outside Bollinger Band, how far? Look at it, it's outside Bollinger Band, it almost goes about 30 pips, and this is where you probably be looking at the trade. We were looking at this trade. You don't have to reach to take profit. I mean, if it goes up Bollinger Band, we know that once it goes Bollinger Band, it probably will go back in. Something's going to happen. It's a good time to secure your profits. Yeah, this is one of the trades that we did it just yesterday night alone. And the other one, which Jin did mention just then, was the pound yen. Straight away, we could identify the market that something is happening. For past 1.5 weeks, the pound yen has been moving consolidation, let's say, across this resistance zone or support zone, how you look at it here, at 150.3 level here. So straight away we could identify a possible straddle. We don't just see a consolidation and we do a straddle. We look at the reason behind it, and we look at what's the news, and we say that yes, looking at the straddle possible, if it goes above, break above the resistance as this bounce back, or it will break through the resistance zone at 150.82, we look to buy. And if it breaks below 149.76, we look to sell. However, after doing the analysis, we had a bias for a buy trade, so we were looking at this. Now, if you can see, it's still activating, and look here, it already is right now taking the trade. For those who put the trade, it already right now is at about 60 pips. Now, we were looking at a profit target of 120, but you have to know that there are news coming in today and tomorrow. So looking at this pretty nice, and it's outside already at Bollinger Band right now. So probably for those, and seems to be coming back into the Bollinger Band. So those who take the trade, possibly you could look for exit trade. But however, these are the trades as we teach you, guide the coaching sessions, do that, coach them. Why do we look for a trade? Now, we not only look for a good trades and stuff, we also teach people, hey, look at the analysis. EJ, this is Euro Yen. Wow, we look at this trade and you can see this purple line. We were looking at this one. It looks as if it's a good retracement coming back down. However, we were discussing yesterday, we were coaching together. I said, hey, this trade, why we would like to avoid the pitfall of rushing into a trade and not take the trade to a sell trade just because it looks as if price action of rejection candle here coming back down. And indeed, what happened is, look at this, it has no trend at all. It goes down before it pushes all the way up. So in this case, it's probably there were so many other trades like the euro pound or pound yen to take compared to the euro yen, and this is how we identify. We coach all our community traders here as well. So for those who are interested, the link will be pasted up on the post to join the LCMS Traders Club if you'd like to join us, the community, learning together and trading profitable together. Okay, yeah, this is how you can make money.
Okay, thank you, Daniel. So I've pasted up the links in the chat to join the Traders Club if you're interested to join their live trading webinars. Okay, so back to my question on chart patterns. I'm just going to give each of the panel a minute to share a little bit about what they think about chart patterns. Do you use it? If not, why? Things like that. So I'll fire it off to Scott first. Scott, what do you think of chart patterns? 1 minute.
All right, 1 minute. Okay. Yes, so chart patterns are definitely important to understand. And I think the most important thing is the big thing that beginner traders don't do well is to have the significant support and resistance levels in place. So charts are important, but they have to be, it's a whole ecosystem. So they have to exist with the support and resistance. And then you have to understand what's going on from a macroeconomic standpoint. So I find that all three of these things are best. So if you take one out, it's still possible, but optimal conditions are all three. So the charts you have to understand, because that is really what the market is doing. You might think to yourself, for example, Tesla, well, way too expensive, but you see what's going on, and that is the most important feedback that you need to get as a trader. So you definitely need to understand what the price action means and how it exists in that chart pattern, no matter what chart pattern you trade, essentially, but it's very important.
Okay, thank you for that, Scott. Now I'll have Kim Hong to share his views about chart patterns.
Okay, so the most common chart patterns that I use are the basic ones, such as head and shoulders, double top, inverse head and shoulders, double bottom. What else? Well, most commonly used are these four. So for me, personally, my advice would be to apply them on higher time frames. I mean, they are of course applicable to lower time frames such as H1, M15, and some people even trade it with M1. But for me, I normally apply it only on H4 and above. So if you realize for Traders Club members, if you are in Forex Trading Asia, if you read the articles that the trade ideas that I share out, they are most of the time applied on H4 and D1. So yeah, that's my number one point that I would suggest people to do is to, the higher the time frame, the more reliable the trade, the pattern itself. Yeah.
Thank you, Kim Hong. Great takeaway on that. And lastly, Jin.
Well. I unfortunately or fortunately do not use any chart patterns at all. This is just the way I trade. Chart patterns for me takes too long to play out. So I don't look at chart patterns. I don't look for trades based on chart patterns, but if I do get into a trade and a chart pattern does play out from that point, or I recognize a chart pattern after getting to a trade, that gives me the additional confidence in the trade rather than to sit there, look for chart patterns, and then get in based on a chart pattern. So a different approach there, but my view is that if I'm looking for chart patterns, everything looks like a pattern. You're convincing yourself of a pattern rather than to try and look for one that suits. So I look at the fundamentals, I look at the technicals, then I get into a trade, and if I see a pattern, then it helps in addition to my analysis.
Okay, thank you so much to the panel. Thank you, Daniel, for sharing the Traders Club. And yeah, we have come to the end of the session. I hope you guys find this session useful. We have tons of analysis and some learning takeaways on chart patterns. So by the way, our podcast is up, running in Spotify. So search for Forex Trading Asia in Spotify. I've pasted up some links in the chat to our Forex Trading Asia Telegram channel for the free signals. The LCMS Traders YouTube channel for the daily recordings, the Traders Club link, and if you're looking for a managed account service, do check out forexbriefcase.com too. And yeah, we have come to the end of the session. We'll see you guys tomorrow for the pound analysis. Thank you so much. Bye.